There has been a lot of discussion in recent years about these Achieving a Better Life Experience, or ABLE accounts. In some ways, they're like 529 plans, aren't they?
Well, these are a special type of savings account. They're similar to 529 plans. In fact, they're called 529A plans, named after the code section that governs them. They're designed for savings for people who become disabled before the age of 26.
Now remind me, if you will, Barbara, what's the benefit for the disabled individual in having an ABLE account?
Sure, Mike. The point of these plans is that it doesn't prevent you from eligibility for government benefits. For example, having an ABLE account won't prevent you from being eligible for Medicaid. Having an ABLE account won't prevent you from qualifying for supplemental security income, SSI, as long as the account doesn't exceed $100,000.
Since this is a tax program, tell me about the contributions. To what extent are they deductible?
Well, just like 529 plans, contributions are not tax deductible for federal income tax purposes, and they're limited to the amount of the annual gift tax exclusion, which is $14,000 in 2016 and in 2017.
Okay, but what about the account's earnings and distributions? They must be preferred in some way, right?
Well, earnings are tax deferred, and distributions are tax-free if used to pay qualified disability expenses.
With programs like this for higher education, some cover only tuition, while others cover a wider range of expenses. And what about with ABLE accounts? What do they consider to be qualified disability expenses?
This is a very broad term. Just to give you some examples, education, training, assistive technology, legal fees, you name it. If it probably falls under the umbrella of benefits to disabled individuals, it's going to be a qualified disability expense. The law has an extensive list, and then the IRS will, of course, be free to add its own items to the list.